Welcome to Cryptocurrency Compliance, where we go beyond the basics and delve into the technical aspects of staying compliant in the crypto world. Each week, we'll bring you expert insights and practical advice on the latest developments in blockchain, cryptocurrency regulations, and more. If you're not familiar with security tokens, they're basically digital assets that represent ownership of a real-world asset, like a piece of real estate or a company's stock. They're backed by the underlying asset and are subject to federal securities regulations. Now, you might be wondering what sets security tokens apart from utility tokens. Well, utility tokens don't represent ownership of an asset and aren't subject to securities regulations. So, security tokens are a bit more formal and regulated. Now, one of the main benefits of security tokens is that they make it easier to trade assets on the blockchain. This is especially useful for assets that are traditionally difficult to trade, like real estate or collectibles. By tokenizing these assets and allowing them to be traded on the blockchain, it becomes much easier for investors to buy and sell their shares, and for companies to raise capital from a global pool of investors. Another benefit of security tokens is increased accessibility. By allowing investors to buy and sell fractions of an asset, rather than the whole thing, security tokens make it easier for smaller investors to participate in investments that may have been out of reach before. This is especially useful for assets that are expensive or difficult to buy and sell, like commercial real estate or rare collectibles. In addition to increased liquidity and accessibility, security tokens also have the potential to reduce transaction costs. By using the blockchain to facilitate trades, security tokens can eliminate the need for intermediaries, like brokers or escrow agents, which can reduce the cost of buying and selling assets. Finally, security tokens have the potential to increase the transparency of investments. By using the blockchain to record ownership in trades, security tokens can provide a clear and accurate record of ownership, which can help to reduce the risk of fraud or other types of financial misconduct. Okay, so now you might be wondering what kind of assets can be tokenized. Well, there are plenty of examples of successful real asset tokenization out there. One example is the tokenization of a commercial real estate property by a company called Propi. In 2018, Propi tokenized a $2 million apartment building in Ukraine, issuing 200,000 tokens at a price of $10 each. Each token represented a share of ownership in the building, and the tokens were sold to investors all over the world. Another example is the tokenization of a luxury car collection by a company called Rally Road. In 2019, Rally Road tokenized a collection of rare and vintage cars, issuing tokens that represented ownership of the cars. Each token was backed by a specific car in the collection, and the tokens were sold to investors at a price that was based on the value of the underlying car. In addition to real estate and collectibles, other potential assets that could be tokenized include commodities like oil, gold, and agricultural products. For example, a company could tokenize a barrel of oil, with each token representing ownership of the barrel. Similarly, a company could tokenize a gold mine, with each token representing a share of ownership in the mine. Derivatives, which are financial instruments that are derived from an underlying asset, could also be tokenized. For example, a company could issue tokens that represent a futures contract for a specific commodity, like corn or wheat. The tokens would be backed by the underlying commodity and could be traded on the blockchain. Okay, so now you might be wondering what it takes to start building a proper security token offering. Well, first and foremost, it's important to understand the regulatory environment in which you'll be operating. Security tokens are subject to federal securities regulations, which means that companies must follow certain rules when issuing security tokens, and that investors must be accredited or qualified in order to participate in certain token offerings. In addition, security tokens may also be subject to Know Your Customer (KYC) and anti-money laundering (AML) requirements, which are designed to prevent financial crimes like money laundering and terrorist financing. These requirements ensure that companies know who their customers are and that they're not engaging in illegal activities. It's important to have a thorough understanding of these regulatory requirements and to have systems in place to ensure compliance. This may involve implementing KYC and AML procedures, like verifying the identity of investors and monitoring transactions for suspicious activity. Another important consideration when building a security token offering is the technology that will be used. Security tokens are typically built on top of a blockchain platform, like Ethereum or Hyperledger. It's important to have a good understanding of how these platforms work and to choose the one that's best suited to your needs. In addition to choosing the right blockchain platform, it's also important to have a solid understanding of smart contracts, which are self-executing contracts with the terms of the agreement between buyer and seller being directly written into lines of code. Smart contracts are an important component of security tokens, as they help to automate the process of buying and selling the tokens and ensure that the terms of the agreement are enforced. Finally, it's important to have a strong team in place when building a security token offering. This may include lawyers, compliance professionals, and technical experts who can help to navigate the complex regulatory environment and build a secure and reliable platform for trading the tokens. Overall, the tokenization of assets has the potential to transform the way that we buy and sell a wide range of assets, from real estate and collectibles to commodities and derivatives. By making it easier for investors to buy and sell these assets, security tokens have the potential to create new opportunities for investors and increase the efficiency of financial markets. However, it's important to keep in mind that building a security token offering is a complex process that requires a thorough understanding of the regulatory environment, the right technology, and a strong team. By carefully considering these factors, companies can create successful security token offerings that provide value to both investors and the underlying assets. Thank you for joining us on Cryptocurrency Compliance for this episode on security tokens and their potential to transform the way we buy and sell assets. We hope you have a better understanding of what security tokens are and how they work, as well as the tools and knowledge needed to start building a proper security token offering. Until next time, thank you for tuning in and supporting our podcast.